Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Tuesday, October the 5th, 2010, and it's time to look at the markets. Okay, let's start with the NASDAQ. First off, this one was up 55 points for the day. Pretty big move for this particular index. We had to start today with the Japanese move that happened before our markets opened. That's what got the markets all in a frenzy and launched it to the big old gap up first thing in the morning. That's what I like. If you were in our live trading course this morning, you know I already mentioned that. I wanted to see it like this, gap up substantially and close up. Don't go back down and fill that. Why do I want that? Because it leaves more problems than solutions. So what happens here, you get gap here, back here as well. All these are still in place, still have to be filled. These are low volume gaps to the upside. These get filled. Like I said yesterday, if you go through and look at anywhere in history, you're not going to find a spot on the NASDAQ that's got 8 gaps in it like this and just a continuous rally, and never mind, ignore those little gaps. We won't ever deal with them. No, you're going to pull back and fill them. That's a technical rule, okay? The thing that we're doing here at PerfectStockAlert.com, and a lot of people seem to be missing, we'll get into that today, but ultimately we're looking for situations where we can't be wrong. Doesn't mean we're calling the exact peak. That's not what we're trying to do. I don't believe it can be done effectively, consistently. So what we do is we say, okay, she's overextended, she's got lots of gaps, short here. She gets overextended even further, fine, add here. She wants to go higher, fine, I'll add later. That's how I'm going to keep doing it. You'll notice back here, I had to wait for months for it to come to me, but it finally did. Why? Because it had to. It's the technical rules. Here, again, the gap was too large. Had people back there in this time saying, no, it's going to fill that gap. Down she goes. Here, other technical rules were in play as well as gaps. Down she goes. Here, same thing. Did we call the exact peak here? No, about 1, 2, 3, 4, 5 days early. And then down she goes. Here, no, I was about 3 weeks early, or maybe 4. Right here, short again, down she goes. Here we are again. Why is it people think that if the market price goes up, I'm going to change my opinion? I'm not. If the situation chart says this is low volume gaps, they're going to fill. There's nothing else for me to do. And I don't understand the mentality behind so many people being wishy-washy. That's not what we do here. And it's not why we're successful. We're successful because we read the chart honestly and say these things will not be sustainable. Short it. End of story. Okay, quick look here at the Dow Jones Industrial Average. She was up 200 points yesterday, a little bit better than 200 points yesterday. Closed up 193 points for the day, and this one got a lot of people's attention. I mean, I got all kinds of emails and comments on our forum and at PerfectStockAlert.com, people demanding that I respond to their questions and so forth and so on. And yeah, I got your response. Here you go. Let me get the right tools out so I can do this properly. Okay, you see this right here? Yeah, that little high point right there is a resistance level. Yesterday I told you we put half a dozen videos on our chart school. You can go there, watch them, they're free. Everything on our website's free. You can go check that out and you would have got an education. So I went today after getting all these demanding statements and I went and looked at that video. It's been viewed about 105 times. Alright, that's kind of odd. We got over 4,000 people on our website every single day, and this is growing daily, and yet 105 people watched that video. Well, let me tell you what happened. 105 people were not surprised by today's move to the upside. Here's the high point. That would make the resistance line. If you watch that video, we told you, oh, this line right here pierced it. When you pierce a trend line, you're warning that you're going to close above it. In this case, you're going to close above it or break down below it, depending on the trend line. Here, you've got a point where it's telling you look for a close above it. Now you've got the close. Why is this shocking to you? Because you didn't take the time to educate yourself. That's not my problem. That's yours. My situation here is that I expect the market to keep pushing. I don't mind that. You can test this high. I don't mind that. You can break out of that high, and I don't mind that either. The end result is you're going to pull back down to fill all these gaps. Here's something else you might want to know. Had you watched that video I told you to watch, or you could have just taken the time maybe, you would have not only seen this trend line here that gets pierced, you would have seen the one at 96.80. Okay, this is the 1-year chart of the Dow Jones Industrial Average. Here's that high point forming that trend, that resistance level right there. Now here's the pierce of it right there. Here's the close above it today. No big shocker. Here's one back here. Here's the support line or the trend line. There's the pierce. That's where you're going. So while you're trading to the upside, go for it. Buy all you want. I'm shorting it in anticipation of a failure, which the chart totally agrees with, and will ultimately fall down, taking out that low. In conclusion, what do I think about today's 200-point advance and maybe tomorrow's little advance? I say short it. Yeah, again, get that out of the way. Right there, okay? A quick look at our disclaimer. The disclaimer, read it and weep. For those of you who were not too busy watching the market price go up and you actually pay attention to the news, the Ireland situation is growing worse. They're contracting again, and there's a threat of Moody's downgrading them further. All the activity that we're doing, the currency war that you see going on, the Fed trying to prop up markets, all this stuff, none of it is dealing with the real problem. The problem is going to take this market down. That's Europe. Have a nice day.